Welcome back to Squawk. Time now for the Executive Edge, and we're going to do a little whale watching this morning. Leslie Picker has been digging through 13F filings that reveal some big portfolio moves from some of the world's biggest investors, in particular Berkshire Hathaway. Leslie.
Hey, Andrew. Yeah, those were due last night. The deadline was last night. We saw Warren Buffett's firm paring back its exposure to healthcare during the second quarter. Berkshire Hathaway selling about half of its stake in Merck, nearly 9 million shares, making the position worth just about $700 million as of June 30th. The firm also shrunk its position in AbbVie and Bristol-Myers Squibb, but they were still worth about $2.3 billion and $1.8 billion respectively at quarter end. Berkshire closed a position in Biogen as well. The firm did maintain its holdings in Johnson & Johnson and Teva, although by Berkshire standards, these were relatively small positions. Berkshire revealed earlier this month that it had been net sellers of about $1 billion in equities during the quarter after unloading nearly $4 billion during Q1. In that vein, Berkshire also sold about 20% of its stake in Marsh & McLennan, which had been a new stake just last quarter, and the firm sold about 10% of its stake in GM. To be sure, there were a few additions. The firm boosted its stake in Kroger by 21% to hold more than $2 billion worth at the end of the quarter, and it added a bit more to Aon and RH. Now, as always with these 13F filings, they're a little dated. These positions are all as of June 30th. They may have changed in the 6 weeks or so since then, guys.
Leslie, what else should we be looking for over the next 24 hours as these things come through?
Yeah, well, the deadline was yesterday, so they're all through. It's going to now come down to the models to really sift through and look at, because there are thousands of these, to see what the real themes were during the quarter. Now, just based on the several dozen or so that we parsed through last night, it's clear that there are a couple of themes shaping up at this point in time. Number one, a lot of fund managers selling down their SPAC positions, which isn't too surprising given the SPAC sell-off we saw during the second quarter, but it was interesting to see kind of the line items within the filings as they came through yesterday, just complete dissolution of a lot of SPAC holdings. Also, there were really interesting ways that fund managers were kind of playing various trends surrounding the pandemic. Some fund managers, you could tell just based on the way that they were investing, really did believe that we weren't out of the woods despite the vaccination rates and the pickup there during the second quarter, the reopening of the economy. Still, there were some fund managers who opted to really kind of double down on more stay-at-home stock names like Zoom and DoorDash, Shopify, names like that.
Hey, Leslie, one thing that caught my attention, at least I think it's the case, but Berkshire looked like it was selling down some of its GM shares. That was, what'd you say, about 10% of it? Stan Druckenmiller bought into GM during the quarter, right?
Yeah. So it's interesting because, you know, you've got kind of these two sides of the coins. You see this all the time with 13F filings where certain fund managers will take massive bets, and then you see kind of the other side of the trade where people will be selling that same exposure. Same is true with the reopening trade that we were talking about before. There were still fund managers that did pursue clear trades that were much more in line with the reopening of the economy. A lot of travel stocks. D1 was a fund manager that comes to mind that pursued names like I think Expedia on that front and other travel names. So increases in booking holdings and Expedia for D1. So it's remarkable when you do kind of look on an individual manager level and see kind of how they're thinking during the quarter. Of course, it's a little dated, but there is a movement in Washington to change it to have only a 10-day window as opposed to 45-day window after the quarter ends.
That would be interesting. Leslie, thank you. It's great to see you.